Good morning and welcome to the next in our edition of Empower Leaders Initiative, the May broadcast, which is going to be focusing on diversity, innovation and talent. Before we start, I've just got a few things that I'd like to tell you that will improve your experience today. On your screens are a number of different modules that will support today's session. There is an Ask a Question module where you can submit your questions, and we will forward these to the speakers to answer by mail, as we will not have time today to do that live. Also, please do fill in the feedback forms, as this really helps us develop the best possible products. I'd like to introduce you to our moderator for the first CEO panel, who is Neil Carnegie, founder and CEO of Carnegie Fund Solutions. And we've got a fantastic session for you looking at talent and diversity in the boutique business model. Neil, over to you.
I find myself today on moderating this panel on the subject, and wait for it, it's quite a long subject: culture, talent and the evolution of boutiques, multi-managers and alternative businesses. And it continues with creating an organization with a distinctive culture that investors desire to partner with and people with potential wish to join. And today I have three panelists with me, Rebecca, Ian and Furio. And so without ado, I'm going to hand over to each one to introduce themselves. So Rebecca, the floor is yours.
Thank you, Neil. Very kind. And thank you for the invitation today. Delighted to be here. My name is Rebecca Lewis. I'm the CEO of Arisaig Partners. We're a boutique fund investment manager. We invest in emerging markets and have been doing that since 1996. We manage a little under $5 billion for institutional clients, and we're an organization of a little over 40 people based from normally offices in London and in Singapore and in Mumbai. The way that we approach emerging markets is very much linked to our culture, which perhaps we'll get into today, but it's one of identifying purposeful growth. So our ambition with our portfolios is to buy businesses that can grow forever. So our average holding period for stocks in our portfolio is 10 years, and that influences the way that we approach our investment due diligence process. So look forward to discussing further, but thank you, Neil.
And now Ian, talking from sunny Eastern Australia.
Yes, thank you, Neil, and thank you for including me, an Australian-based multi-boutique funds management group. So we commenced as a startup about 15 years ago. The key founders of the business had all had long careers working in institutions in funds management, and we believe that there is a better approach to being structured for investment excellence. And so very germane to the topic that we're speaking about today. We believe that the most talented investment professionals very often are able to blossom and go about the business of producing strong investment returns in a particular environment, which is the boutique environment. So this is an environment of lack of distractions, complete focus, where investment professionals have the freedom to not worry about any of the other functions of a funds management business, but purely focused on investing. We believe in equity on the part of those investment professionals. We like them to feel that it's their business. So we have 16 boutiques in our platform, and Pinnacle itself owns a minority equity stake in each of those, and the investment professionals between them own a majority stake. So the business, the boutique business, belongs to the investment professionals. So they have, total alignment with their clients and, total incentive and the right environment to produce strong investment performance. We believe the functions of distribution and fund infrastructure, there are scale benefits there. So Pinnacle provides those services to all of the affiliates in a centralised basis, but the affiliates themselves are each separate and independent. We've grown now after 15 years. We've become listed about 5 years ago, so we are a listed business now. We have about 85 billion Australian dollars under management, so I guess about 60 billion US dollars amongst our 16 affiliates.
Thanks so much, Ian. Can I now pass the word to Furio, who's sitting today in Dublin?
Yes, thank you very much, Neil. And well, I'm the CEO of Mediolanum operations here in Ireland, the asset management operation, which is the European platform for the Mediolanum Group. We are probably known for our retail footprint because our focus is providing financial solution to private investors. And we love to do it, and our priority doing through financial advisors. Our group has the largest financial advisors network in Spain, and one of the largest in Italy as well. While in Germany, we distribute through independent financial advisors. We believe very strongly on the value of an investment solution, but more important, the financial advice, the education that the financial advisor can provide to the final investor, because investing in the right solution vis-a-vis their own long-term financial goals is fundamental, but is as much as important the behavior that they maintain during the life of the product. So even though you have the best product, the best performing product per se, if the behavior of the investor is the wrong one, then the outcome can be easily suboptimal. We are a multi-manager, and we have evolved over the years. So we are now today roughly 50 billion overall of assets under management. And we work with the large established managers, but more recently, we have focused more and more our attention on the boutiques, because we believe that there is a massive opportunity coming out of there for two reasons. For the reason, obviously, that and Rebecca mentioned, but also because for us, as an investor, it's easier from the engagement perspective, because if we think about 15 years ago, probably there were only 5 groups with over $1 trillion. Now we have probably more than 20 groups. They are in around the 1 trillion assets. And with the size, obviously the engagement, the client servicing, can become more challenging, and as well as being relevant for these bigger players, can become a little bit more challenging. While when you work with boutiques, we like to be always one of the most important clients for them. And we think that can be very successful for the long-term value of both businesses. And we like as well to bring on the table other stuff, which is not just assets, but what we can offer as an asset management with our network, with our relationship, in helping them at 360 degrees.
Thanks so much, Furio. Can I ask the three of you for an overview of the relationship between your board members and the management, respectively? What is the board, the representatives, the shareholders, expecting in the way of outcomes in creating a culture and creating alpha? Ian, can I start off with you, please?
Yes, absolutely. So as I mentioned, we're listed now. So we have a board of 7 directors, 4 of them, so a majority independent, non-executive directors, but 3 of us are executive directors. So myself as the Managing Director or Chief Executive, and my 2 key colleagues who are our heads of retail distribution and institutional distribution are also on the board. That's a little unusual for a listed company to have 3 executive directors, but remember, we founded the business, the 3 of us, and we're a startup, and we've grown the business together over 15 years, 11 of which we were privately held, and we were the largest individual shareholders. So now being listed. Yeah.
Now that you're founding shareholders and board members, Ian, what are you expecting to add to the client's experience, and how is that going to allow your business to develop?
Yeah. So as I mentioned, we have this particular model. It's a fairly unusual model here, the multi-boutique model. It was designed specifically to allow the most talented investment professionals to go about the business of producing alpha. So active management is really hard. You need the most talented people in the right environment in order to consistently produce alpha. And we have a very strong track record of doing that across quite a large number of boutiques. So our clients love our model. Our model is extremely well regarded in Australia in both the retail and the institutional market. They love it because it delivers what the investors want. They want the right professionals to stay in the business for a very long time and not have a turnover because of remuneration issues, etc. The equity ownership means that our talent investment professionals stay for a very long period of time. That's something that our clients very much want. So the clients love the model and the shareholders love it because it's produced tremendous growth and success for the shareholders.
Furio, you have a similar business, but on the other hand, very distinctive. How do you interact between the board and the management, and how does that dynamic create alpha and satisfaction for your underlying investors?
Well, you know, in our board, the majority is independent. So independent non-executive directors. And that to us is a very important element because clearly, you know, the priority from their shareholders is the revenue value for the investors. And we know that is becoming, and is always been, but it's becoming more and more paramount, you know, to survive and to be successful in the industry. And I think that having a majority of the board is an important safeguard. If we're looking at our board as well, for example, we have there is a very mixed expertise. So there are very strong and expert asset management practitioners, and in particular as well on the multi-manager side with a veteran and a multi-manager former Mercer executive, but as well as we have a very strong regulatory you know, footprint, having the former head of the supervision of the Central Bank of Ireland in the board. In terms of executive director, we are 2, is myself and my colleague, Christophe Joubert, who is the CIO. And the mandate is very clear. He has the responsibility reporting into the board, you know, directly in terms of results, the quality of results. And that's, again, another element of how much the board wants to be involved on the supervision of the results and making sure that they are aligned with the objective of the shareholders, and myself that is looking after at the rest of the business. Clearly, we have also some shareholders representative in the board that are non-executive as well, and we think that is the right level of transparency in the decision on the strategy and as well as the implementation, because as a matter of fact, any board member, they can have access on a regular basis to all the executive first line, so they don't need to go through me as a CIO or a CEO or through the CIO, Christophe, but they can exactly go in through the different functions, head of function in the group. And this has been working very well because it's building trust, but as well as is supporting me to make sure that the messaging comes always from the top and is very consistent across the business. So it's not just the CEO or the CIO, but it's coming across from all the directors as well in their ongoing engagement with the teams. That doesn't make them, executives clearly, but makes them important to set the tone in terms of the priorities.
Really well made on this alignment point. So Arisaig is privately held. It's held by founders and partners. So in that sense, there's two groups of stakeholders. Ultimately, for the life of Arisaig, since we founded in 1996, the alignment has been driven by investment in our products. We see that as the real currency. And that has been part of our culture, perhaps a word we'll pick up on later, since the inception of Arisaig in 1996. The way that it manifests today is that for new partners, myself as one of 5 partners in the business that have been running the business for the last 6 years, 100% of the proceeds from our ownership of the business gets invested in the funds. Really, because, to drive that alignment point that you were mentioning, Ian, and how important that is for us. A second point that, related to this is just on the governance framework that Arisaig utilizes. We're a B Corp, which is a sustainability related, if you've not heard of it, it's essentially a sustainability governance framework, which means that we sign up in the governance documentation of our firm to take a multi-stakeholder approach to the way that we manage our business. And we believe this is a really authentic and aligned approach to actually what we're trying to deliver for our clients. This long-term purposeful growth is very much driven by a multi-stakeholder view of the world. We believe that we generate alpha for clients by taking a truly long-term view of emerging market growth, which means we think about not just about returns, but we generate returns because we think about the environment and the communities in which we operate. And so we don't just say that to our holdings and we don't just invest in businesses, but we've implemented that in terms of our own structures. So that's kind of an additional point that, again, links to alignment, right? Whether it's investing in your own products or whether it's organizing yourself in a way that aligns to how you add value to your clients, which I think we're all on the same page there.
Absolutely.
Sorry, Neil, I think you're on mute.
Yeah, can I jump in and ask you how you attract talent? Or don't you need to attract talent because they're standing in front of the door trying to get in?
Yeah. So we believe that the most talented investment professionals self-select into our model. It's been proven over a long period of time that the people who are the most successful, normally getting their training working for institutional fund managers, that's where we all got our early training. But those who really have self-belief and very strong track records and a very strong following by clients, they tend to love the boutique model where they have equity in the business, real skin in the game, and their business is entirely designed to produce alpha and investment performance and to be very close to the clients, to make sure they don't exceed capacity and just generally to do everything focused on delivering for clients. So they're not reporting to someone above who drives them for growing profits or other objectives that can be inconsistent with the needs and the objectives of the ultimate client. So we don't have any problem at all attracting talent. Talent does find us. We know the people out there who are the most talented. It's really when will there be an opportunity for them to leave where they currently are and set up in their own business. But we say no to the vast majority of the people who would like to work with us. And so we can be extremely selective.
Rebecca, how's that differ from your business?
We grow talent, I think. We have a very clear, we hope we have a very clear understanding of how we add value to clients. And I think there we benefit from experience. We've been investing in emerging markets for 25 years. So we have a track record to prove that we can deliver, very strong double-digit returns to our clients through this research-led approach. And so we hire people pretty young in their careers and very often outside the finance professions. And what we're really looking for is that alignment of culture, that fit perspective. And then we like to give them opportunities to grow and to watch them grow, and to then, if there is an opportunity to run a product for Arisaig, then there might be, they then become a partner and then remain in the business for the very, very long term. So I think it again comes down to this clarity of purpose, we believe. If you're really, really clear on how you add value to clients, if you're very, discerning about what you stand for, similar to Ian's points, perhaps, then people come to you. And then it's up to the culture of your organization to help that grow and nurture that and provide the opportunities. And that's not always there. We've had amazing people leave Arisaig because there hasn't been that opportunity for the next stage in their career. But I think that's okay. And that can often be great for them as well, that, they can leave Arisaig having worked for 8 to 10 years within our research group. And they very often go off to amazing things, running money elsewhere. So I think clarity of purpose for us is key to building strong culture.
Furio, and on your side?
Obviously for us, it's different because we don't, it's a different business model clearly. But one element is very common though, is the entrepreneurial environment that we can offer. Because I think that our organization is an expression of entrepreneurial leadership from our founders. And I think that we have proven over the years that, we are walking the talk, and that's what people like. We are still small, even though we are not a boutique anymore in what we do, but we are still small compared to the bigger player. So, and we have proven that we are ready to invest, capital in whatever is necessary in order to be successful. When we roll out our strategy in internalizing some of the strategies, we have deployed, an important amount of capital in terms of people or resources. We have given the mandate to the people to develop the business within the equity and fixed income, and we have supported them along the way. So that's the best proof for us. And we have seen that when you have high quality, motivated people, that they feel accountable and they feel responsible. That is incredibly successful for the business, and quality brings quality. So that's what has been happening for us. Clearly, the entrepreneurial environment is not for everybody, because it requires a lot of accountability, from people. And particularly when you develop a business, you are not sitting in something that, is standing still or is very well established. You sit on something that is constantly evolving, and you need to be able to live with the moving parts. And this is very exciting for a lot of people, and being able to learn from the mistakes, or for learning from what they see working less better than other things, and helping you to take the right direction. So we like to combine, let's say, mature talent, together with, younger talent, the people that have the energy, the desire, the excitement, of approaching things and exploring. Everything, even the cul-de-sac one sometimes, but that's the way you learn, you know what I mean? So that's the two combination is working very well. And, but
let me ask you, you're obviously have one part of the operation in Ireland. You have then very important businesses in Italy and in Spain, and now developing in Germany. How are you managing those cultural fits?
Well, clearly we have a diversity in terms of our company population. So in terms of, it becomes almost natural, because I think we have 19 different nationalities working here. And therefore people are used to their daily dealings to deal with somebody different that thinks different, acts different, and therefore it's less of a challenge. But I think that the trick, like everything, is just listening who is on the other side. When you think about our client centricity has always been our safeguard, because we always started from our client. If the client is not happy with the financial advisors, or the results, the financial advisor is gonna lose the client, and we are gonna lose the financial advisor, because it's not gonna recommend our product. So it's, our interest is as the maximum alignment. So you need to start always to look at the client needs, and when you're listening to them, and then is the best way to learn how you can deal and how you can, fix and adjust. So at the end of the day, it's a matter of attention, It's not a cultural element, but is where is your priority, where is starting off your priority when we are talking about distribution, Neil, just to be clear. In terms of cultural element on outside the business in the ongoing engagement, again, is the diversity element that I mentioned before. People are quite used to it.
Ian, you're also got an aspect on the distribution side. Are you discovering the same kind of things?
Yes. So again, we believe that we are able to attract the most talented distribution people, the most experienced and most talented. Our organisation was designed from scratch with the purpose of delivering what investment professionals need to be excellent. So our motto is supported independence. So they can focus entirely on investing, and all of the other functions are undertaken for them, and they don't have to be distracted by that. Whereas when we all worked in institutions, our investment professionals were invariably tugged in different directions to be involved in organisational matters.
Rebecca, is on your distribution side, has that evolved over the past years, or have you got a very stable and loyal investor base?
Yeah, it's a great point. Hey, I mean, our patient approach to investing in emerging markets only works if you have patient capital on the other side. So we're fortunate that, our average holding periods for our stocks is 10 years, but our average client relationship is 10 years. And so they're the real heroes in our investment process, is taking that really long-term view. It just is a key enabler for us to generate alpha for them and serve them better. I think it's interesting to think about how we continue to attract them with, time horizons shortening and, just the whole world. Everything seems to be getting shorter in terms of performance metrics, but that's really where I think, in terms of this panel, this is where the culture of the organization really has to stand tall. The clarity of purpose, the clarity of discipline, the performance continuing to come through to shore, but to be able to make really strong links between the performance, the double-digit returns we're delivering for our clients, and the way that we invest and the culture of our organization. And that's really the glue that holds it all together.
I'm conscious of time. I'm going to have to thank you kindly. And Ian, Furio, Rebecca, thanks so much. And to the audience, we wish you a good continuation of your day.
Thank you very much.
Thank you, everybody. Thank you, Neil.
Thank you. Thanks.
Bye-bye.
Thanks, Neil. That was absolutely fantastic. Now we've got something really special for you. We've got an amazing interview with two stars of innovation talking about D3, diversity, digital, and the democratisation of finance. So I would like to introduce Clare Calmejane, who is the Head of Innovation for Societe Generale. And she's going to be interviewed by Sam Seaton, who is the CEO of Moneyhub. These two superstars of fintech are commencing a series which will be broadcasting throughout the Empower Leaders initiative. Sam and Claire, over to you.
Claire, welcome today. We're off to a great start on this session, which is all about digital diversity, transformation, and dare I say it, risk. So we have today Clare Calmejane from Societe Generale, and she's actually the Chief Innovation Officer. So we don't have, much better than this to kick off our session today. So without further ado, Claire, can you just give us a little bit of a brief intro about your background and what you're doing at the moment?
Sure. Thanks, Sam, and hi, everyone. I'm delighted to be with you today. So actually, by background, I'm an IT engineer, and for the last 15 years, I've worked at the edge of how do we embed digital and innovation at the heart of the strategy. And today, I'm doing that in a super large organization. Societe Generale is present in 61 countries. We have about 133,000 colleagues across the world, and we range, our retail banks range from France to Russia, Africa, and our investment business up to the US and Asia. So it's a very diversified business model across the group. And my mission is obviously to serve the group strategy, which is around 3 pillars: client centricity, and digital is all about the clients. We'll talk more about that. Efficiency, and again, data, AI, will support, strongly efficiency in the system, and responsibility, sustainability, which is a new trend, which is accelerating, but it's part of our raison d'être, of our North Star in Societe Generale, to co-build with our clients a better and more sustainable future by providing responsible and innovative solutions. So in order to do that, I focus on 2 areas. The first one is to accelerate the transformation of our current models, so either through retail banks, but also investment banks. And I was talking about clients, we really take a client lens. So we try to understand, currently the financial industries is at crosswind between new customer usage, new entrants, regulation, and in Europe, low interest rates, and we see there is a high pressure for transformation. And what is important, and you were talking about risk, is really to embed this part at the heart of our strategy. And in order to do that, we are, I report to our CEO at the group level, and really oversee the transformation across all our brands, all our activities, in order to, of course, there is specific geography, but really, what could be consistent, what can we leverage, what is the power of a group in a transformation which is so huge. And the second area where I work is around creating new business model, and I oversee our fund SG Venture, which I've already invested 200 million in startups, where we're not going to just, do the transformation of current business model, but really to create new ones. And just to give you a couple of ideas, we've acquired a startup called Trésor, which is in the field of bank as a service. So it's a new business model, a new economic model based on platforms where we license, a software which will distribute part of financial services products such as payments, cards, KYC for 80 different neobanks or fintechs in Europe, because we have expanded across Europe. And that's a new line, a new revenue line and a new growth. So I focus on these 2 areas: accelerating the transformation of our current business model and creating new ones, which is not straightforward and not easy when you work in such a large incumbent.
Yeah, I agree, Claire. It's tricky, but I guess, the World Economic Forum last year at Davos, and again this year, was absolutely clear about what you have just described, which is this transformation towards the client, the customer centricity, because they were really saying that the new currency that we all need to survive and thrive with is sorry everyone, it's not cryptocurrency. Well, it's not yet, but it's trust. It's that currency of trust, which is why the shift is so massive. And with that in mind, and with your remit, can you tell us a little bit more about the way that we're going to achieve that? So how are we going to achieve this new currency of trust?
Actually, it's an interesting question, Sam. I don't think it's a new currency. I think trust has been the business of banks, as long as Societe Generale existed 150 years ago. And the promise is, how do we remain this partner of trust, in the future, in this digital world? So, the basic of the business model of retail banking is really that clients will lend us their savings, their money, and we'll keep them safe, and we'll help them to build their their wealth, to build their financial assets in order to profit the real economy, and to each of us live our life, realize our dreams and do that. So it's not a new thing. It's really at the heart of the business model, but of banking and of traditional actors of banking. The question of how do we keep doing that in a digital world is important. That means that we have first to invest in cybersecurity and cybersecurity risk, because digital obviously have introduced instantaneity, new ways to engage with mobile or online, and as such also risk of IT risk, which are categorized under cybersecurity. And at Societe Generale, obviously, we invest heavily on this area, which is under also the reporting of our CEO, Frédéric Oudéa, like me, and that's one of our key areas and preoccupation of focus. The other one is to stay true to everything around the protection of the customers. And that takes two parts in digital. The first one is really about building a digital capability which is fit for also vulnerable customer, which is inclusive in the way we design it. And for that, in the business areas, you can see new roles which are created, which sometimes you may hear about, which are service designer, system thinking, CX or UX analyst. And their job is really to make sure when we design like an home page, it's inclusive, that everyone will understand and can navigate very easily. And when it's done properly, it's very, very powerful, because what yesterday was, reserved to clients that could enter a branch, that could have a private banker, today is democratized. Today, it's accessible for everyone. So, for example, if I go in France in Societe Generale website, I can aggregate all my bank accounts in one place to really see, what is the status of my finance, and to start savings, to start aggregate my financial and non-financial assets, and by myself to do allocation. And yesterday, you had to, this was only for a few levels of the population. And today we see more and more with fintechs, with proposition of banks, that it's accessible for more people. The second area is around data. And here it's very important, because some new business model of fintechs that we are seeing, their business model is based on monetizing the data, monetizing the personal data. That's what, for example, GAFAs, Google, Amazon, Facebook, are doing. Their business model is advertising, and most of their revenue is generated in advertising. In banks and in Societe Generale, we're very strong around the data protection. And, for us, it's very important to be this partner of trust that will protect the data. And we can see that in the next couple of years, it's probably going to be one of the potential area of development of new growth, which is my second hat.
Yeah, well, with that in mind, I mean, given what we have got ahead of us, can you do two things for us before we finish up, which is tell us about a challenge that you're still experiencing today, and a challenge that's gone, which is good, but it's kind of, we've done that, we need to move on. Two takeaways would be great, Claire.
It's a very good question. What are the challenges? What are your takeaways? I think, for me, and I can say that because obviously my role now is, a global role across our organization, but I think the fight for people to understand digital is critical in the future of financial services is gone. I think, most of the banks have embraced, this new customer usage. And at Societe Generale, we're very proud of our trajectory. Currently, in our 30 million clients in retail banking, 60% of them are digital. You know that because of Moneyhub, 60% is huge when it comes to digital. They're very active, this population. They engage about 30 times a month, through digital. And for me, that's very important because that means they understand their finance. That means that our website or mobile is inclusive if they go 30 times a month, that they are comfortable to use it. And that's what our numbers are saying to us, because about 98% of them, do their transaction online. So they feel comfortable to, do that in autonomy. And again, the autonomy is the first step in the ladder for the savings for going further. And as we are moving along now, in small and medium enterprise, in large corporate, in asset management, digital is going all the way up the chain to large corporate and FI segments. I think the challenge still ahead of us, though, is really the one around responsibility. Is really how do we use, innovation and digital to serve, the agenda around climate change, around, scenarios of more inclusion, more diversity, which reflect in a better and stronger economy, but also a more fair society. So how can we, and digital is key to that, because, when I was talking about diversity, it's been, 10 years because I was, quite accelerated in my career that I wanted to give back. And, being able to really build pipeline of the numbers is the key point when you start this journey, because it's not about just best practice to promote women. It's really about monitoring the pipeline, understanding what women do, how they are promoted, and not only women, because obviously the diversity agenda is much broader.
Well, look, that's amazing. And, such insight to have today, Claire. So thanks for that 10 minutes, that snapshot into your world, which is not very much, but we could do it for all day, as you know. Thank you very much for that.
Thank you, Sam. Bye-bye.
Bye.
Thanks, Claire and Sam. That was absolutely amazing. So, well, that's a wrap for the May Empower Leaders broadcast, and we look forward to welcoming you to the June CEO Summit Empower Leaders, which is going to be on June the 14th. Also, please do put in your diary July the 13th for Empower Leaders broadcast specializing in private markets for retail markets. And of course, our All Singing, All Dancing live event on October 20th to 22nd in Monaco. So keep your eyes peeled for more information about that. Thanks a lot and see you soon.